This is the ES4 Renko on 2/7/2012. I made 2 trades today. First trade I entered on this bar right here, as everything lined up to look like it was going to be a nice big down move to me. There was a squeeze right in here, and the swing cycle crossed below the variable band right here, right where I took this trade. However, I was wrong in thinking this was going to be some big down move, and I just barely got out of it for 1 point when the triangle completed the final leg right in here, and I got out on this bar. But the swing cycle was shooting up here, crossed above the variable band right here, and that's there was about 3 minutes between when this bar ended and this bar finished forming, so I was able to get into the trade on this bar just as the swing cycle was crossing above the variable band, and the other indicators were all moving up. So I stayed in the trade and for 8 points got out of it right up here at 12:43, and it had slowed down right up here. There was about 15 or 20 minutes between these two bars here, while this bar was still hadn't formed, and the DIX was moving down significantly here. So I was in this trade for quite a while, so and it seemed to be petering out up here, so that's why I got out of it at this point. Another thing I wanted to mention is that particularly this morning, the DMI differential and the RWO indicators looked quite similar to each other. Now they're both based on totally different principles, but they both measure trends, so they should look somewhat similar. But I wanted to point out on another screenshot here how they differ. This is a screenshot from yesterday, and the DMI differential right in this area stays red and stays below the dots that are green, and it doesn't turn green and get above the dots till right here, this bar right in here, whereas the RWO indicator crosses above the dots and right here, and then the dots turn green on this bar right here. So there's 1, 2, 3, 4, 5 bars early in here. So if you want an early indication of an uptrend, this is what you get with the RWO. And as I said many times, they do look somewhat similar because they both measure trends, but they are based on totally different principles, and occasionally you can see a big variation in the two indicators, as I've illustrated right here and right here.